Okay, everybody, it is me, Gregory Mannarino. It is Monday, September 19th, 2022. People, this is not looking good at all here. The phenomenon of global bond yields rising continues, and it may even be accelerating here. And that, as you all know, if you've been following this blog, is the key. It's the key to this entire thing. We have a debt market that is illiquid. It's becoming more illiquid every single day. Again, understand the dynamic here. It's extremely simple. As bonds sell off, yields rise. Now, I have explained to you that more or less, we're seeing a controlled sell-off here in the debt market. The 10-year yield, as I am doing this, is 3.5%. If this trend continues, especially, and I believe this is going to happen, you're going to see the 10-year yield continue to rise and the relative dollar strength rise. The market's going to hate it, as you all know. You've been watching this for weeks and weeks now. I've been covering this at length, and you're seeing it play out right before your eyes here. Now look, what you're not going to hear ever, from the mainstream propaganda ministry, from anyone else, honestly, is the gravity of this situation here. I cannot stress this to you enough. I have explained to everybody for many, many years now that at one point, this debt market is going to melt down. And we really could be on the precipice of this. Again, if this gets out of control, if we go from a slow, controlled sell-off, which we're seeing right now in the debt market, causing bond yields to rise, 10-year yield more specifically, to an uncontrolled sell-off, meaning 3.5, then all of a sudden 3.6, 3.75, 4, bang, 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 in a rapid succession. And if the dollar, and I believe this would happen as well, the relative strength of the dollar also spikes, it's going to wipe the stock market out. But the bigger picture is not just the stock market crash, which would be epic, and it will be eventually, it's going to happen, is the backbone of the entire financial system is going to break. And that's going to cause a credit problem, liquidity crisis. Everything's going to stop. You all know that. This is why I've been urging people for weeks now to have some cash on hand. Keep some cash in your house or somewhere you have access to it. Because in the event, and again, look, don't just blow this off. This could happen at any moment. It could happen today. Let's say, for example, you see the 10-year yield now 3.5, all of a sudden make a jump to 3.8, 3.94. And this could happen in one freaking day, okay? That's going to be it. That's going to be the biggest sign that the system is locking up, and you're going to see the stock market fall thousands of points, okay? This can happen potentially. You always have to have the high ground. You got to be ready for these kinds of things. What's wrong with being prepared? I don't know. Whenever I tell people to prepare for something, I get the trolls crawling out of the woodwork. Oh, Greg's panicking again. I'm not panicking. I'm just telling you what you should do. If you panic about it, well, that's up to you. I'm just telling people what I think they should do. I'm telling people what I have done myself. That's what I always do. What's Greg Mannarino doing? I tell you here. Now, so on the back of this phenomenon occurring, it's not stopping this phenomenon of rising bond yields, sell-off here in the debt market, 10-year yield rising here. You got stock futures lower across the board, several hundred points. Trading doesn't start for about 30 minutes from the time I'm doing this, 34 minutes actually from the time I am doing this. Market's going to start out lower here. You got crude oil getting punished. Why is crude oil getting punished? Because, again, the forecasts here for global growth continues to be downgraded. Goldman Sachs just again downgraded not just global growth, but growth here in the United States as well. You know better than anybody, because you're not going to hear this again in the propaganda ministry or probably anywhere else, that the global economy is shrinking. It's shrinking extremely rapidly now. We got this other issue here of the yield curve continuing to invert. That is a clear sign that the economy is in free fall, but we're not in recession. Remember that. We're not. because they're telling you, Janet Yellen's telling you we're not in recession. Our president's telling you we're not in recession. The man can't walk and chew gum at the same time, but he's telling you that we're not in recession. I mean, come on, people. You got to be kidding me. I mean, again, it's just the lies, the propaganda, the distortions of the truth are just out of control here. So it looks to me, I was writing a few things down here I wanted to cover with you this morning. Look at that. Anyway, so a pan sell-off is taking place. Pan, meaning everything is selling off here. Cryptocurrency is getting hit. Crude oil getting hit. Gold and silver under some pressure right now. Dollar strength is higher. Yes, the dollar strength is putting pressure on commodities, gold and silver. That's the way it works. These things are priced in dollars. You all know that now. With regard to, look, I probably was one of the first people to come out over a year ago explaining that we would see a phenomenon occur, another one, that is the relative strength of the dollar. The dollar compared to other currencies would rise, and it would probably rise dramatically. It definitely has done that. And I don't think we're done here. Again, there's a knee-jerk. There's always this knee-jerk reaction into the dollar. When you're getting the perceived safety of the dollar, should I say that instead? When you have global bond yields rising like this, that's obviously bonds selling off here, which is putting pressure on the stock market. What do people do? They tend to hoard dollars. They hoard dollars because, they see it as a safe haven. This phenomenon in the current environment is more than likely going to get worse. And that's going to pressure commodities as well. It's going to pressure the stock markets around the world as well. You all are very versed in all of this, I would have to believe, if you follow this blog. I've covered this at length to the point of nauseum here. I expect the MMRI, the Mannarino Market Risk Indicator, free to everybody, link in the description of this video, to hit a new all-time record high today on the back of the bond market sell-off, yield spiking, and the relative strength of the dollar climbing. Keep your eye on this. We're really not far from extreme risk. Look, what does this all mean for everybody here? Should we be nervous or panicking? Never panic. Nervous, look, you can channel nervousness to action. What I want you to do here, and what I think you should do, what I'm going to do, is take action. Okay. Realizing the situation that we are in, understanding that the economy is in a free fall. It's going to get much worse. Inflation is going to continue to surge out of control. Even, look, the Fed this week, I covered this yesterday in my Markets A Look Ahead. If you haven't seen it, please check that out. We're going to get this big decision on Wednesday from the Federal Reserve regarding monetary policy, and they are going to bump the federal funds rate. It's a guarantee. It's going to happen. The only question is, what is it going to be? 75 basis points or 1%? Like I said, I'm going to go out on a limb. I'm going to say 75. A lot of people think it's going to be 1%. Okay. Is it going to make any difference at all to slow the rising pace of inflation? No. How about no? It will not do a thing. It hasn't done anything for months, many months. We're seeing the same phenomenon, raising the federal funds rate, raising the federal funds rate, raising the federal funds rate, and inflation continues to rise. They can't stop this. I've told you this a million times. The phenomenon here, another one, is central banks have gone wild since the last meltdown, printing cash out of thin air, adding it to a digital screen, buying assets. Okay, these dollars are starting to move. These bills, these fiat bills are starting to move. They're starting to chase a smaller amount of goods, and it's economics 101, as you all know. They can't stop this, nor did they want to. Again, central banks are determined to fulfill their end game, to be the lenders and buyers of last resort. That's it. That's their goals. They have two goals, to be the buyers and lenders of last resort, or it could be one and the same here, okay? And they're going to continue to pressure the global economy until they achieve that goal. And the grand finale, as you all know again, is going to be the debt market meltdown, which is just going to cause cash to move from one set of assets into another. And it's just a simple mechanism to understand. Risk on, meaning cash going into equities and stocks, will rapidly turn to risk off. And then you're going to see cash just move into commodities because they are real things. They're things you can actually hold in your hands. They're tangible. They're not like the rest of this thing that we have around us that, is not even on the elemental chart here. Layers and layers of derivatives. I mean, it's just an incredible thing. Anyway, look, let me just make sure I covered everything I wanted to talk about, and I'm pretty sure I did do that. So look, you know what to do here, people. You realize the situation. It's so simple. You understand, and at least you should, that global debt is going to continue to surge higher. It's not going to stop. If we continue to see, if we get into a situation here where there's an uncontrolled sell-off in that debt market, and you're going to see the MMRI spike over 300, okay, when this occurs, and who knows where it could eventually go. That's that moment of maximum saturation here where we got to run for the hills, get out of everything, and really maybe run to the hills and try to stay off the grid for a while. This thing could get that bad. So just think ahead a little bit what you need to do for your own unique situation to prepare for what's coming, because it's going to happen. And it's not by accident either. This is being driven deliberately by central banks along with their respective puppet governments to bring in an entirely new system. I think you're all well aware of that. I really do. If you've been following this blog, I've been telling you this for freaking years. All right, look, important video, at least I believe so. If you believe so, please hit that, wherever that thumb is, one down here. Give me a thumbs up, please. I'd appreciate it. Share the video, comment. I do want to hear from you as always, and I will see you at the end of the day.